Do you know, a lot of GST appeals get dismissed because of these three simple yet avoidable mistakes. Number one, filing appeal after the due date. Number two, paying pre-deposit through DRC03 challan instead of through the appeal. Number three, not paying interest on the tax admitted. While filing GST appeal can feel complicated, understanding the key issues surrounding a GST appeal can help you save time, money, and more importantly, your mind space. Watch till the end. I'll take you through the key issues you should be aware of before filing a GST appeal, and knowing these issues can help make a significant difference for your business. I'm Pradeep Reddy, a chartered accountant with over 10 years of experience in customs duty, VAT and GST. Over the years, I had the privilege of working with businesses of various sizes, helping them resolve their tax disputes, help them claim refunds, and handle tricky situations like exemptions and classification. Businesses often face these 5 issues while filing GST appeals. Number 1, missing the opportunity to file a rectification application and avoid an appeal altogether. Number 2, struggle to pay pre-deposit or try to avoid it on the assumption that it can be waived off. Number 3, fail to file the appeal within 3 months from the date of order. Number 4, confusion as to whether the pre-deposit has to be paid through cash or through ITC. And number 5, uncertainty about what to do when the appellate authority confirms the demand. Here is how you can deal with the 5 common issues while filing GST appeal. Number 1, explore the option to file a rectification application. Not every order requires to go through an appeal route. You can explore the option to file a rectification application if the issue is minor or if the issue pertains to delayed claim of ITC for the financial year 17-18 to financial year 2021. Now let me explain both the rectification options. Number 1, rectification can be sought under section 161 of the CGST Act, which allows rectification where there is a mistake apparent on record. This option can be explored when the GST authority has ignored any information while passing an order or where there are any arithmetical errors in the order. Number 2, rectification can also be sought in case where the demand was on account of delayed claim of ITC pertaining to 17-18 financial year to 2021 financial year. So before filing an appeal, please check whether rectification can be a quicker and easier solution. Number 2, be aware of the timeline to file the appeal. The GST law allows a timeline of 3 months from the date of order to file an appeal. Further, the GST law empowers the appellate authority to condone the delay in filing the appeal up to 1 more month. So overall, we get a timeline of 4 months from the date of order. If it is beyond 4 months, the GST law doesn't allow the appellate authority to condone the delay. In such cases, taxpayers may approach the High Courts for the condonation of delay beyond 4 months, and the High Courts may or may not allow such delay. The existing judicial precedent suggests that the High Courts may condone delay in situations like no hearing was provided before passing an order, appeal was delayed as the taxpayer was waiting for the rectification order, or due to accountant or auditor's error. Interestingly, Calcutta High Court in the case of Sujit Das has held that the appellate authority has power to condone the delay even beyond the 4 months in terms of powers contained under section 5 of the Limitation Act. As regards the timeline to file an appeal, when a rectification application has been filed and it got rejected, it has to be filed within 3 months from the date on which the order accepting or rejecting the rectification application has been passed. This has been held categorically by Madras High Court in the case of SPK and Co. However, the application of this order at the ground level is not much. However, it is advisable to file an appeal within 3 months from the date of original order instead of 3 months from the rectification order, considering the lesser acceptability of Madras High Court judgment on the ground level. So, when you file an appeal, ensure that it is filed within 3 months from the date of the order. To file an appeal, a pre-deposit of 10% of the tax disputed and 100% of the undisputed tax demand plus interest thereon has to be paid. For example, an order has been issued demanding a tax of 10 lakh rupees and the taxpayer is ready to pay a tax of 5 lakhs and the taxpayer is not okay to pay the balance 5 lakhs, then in such case, he has to pay a pre-deposit of 10% of the tax disputed, which is 50,000, and 100% of the undisputed tax, which is 5 lakhs, and interest on such 5 lakhs. Overall, he has to pay a pre-deposit of 5.5 lakhs and interest on the original 5 lakhs, which is not disputed. If the appeal is being filed with respect to interest or penalty or for a refund matter, then there is no pre-deposit requirement. Based on the judicial precedents, it is observed that the High Courts may waive off the requirement of pre-deposit. Whether the requirement to pay pre-deposit can be waived off, High Courts have exceptionally allowed waiver of pre-deposit in situations like when the bank account has been frozen or when 100% tax has already been paid during the dispute. Number 4, whether the pre-deposit has to be paid through cash or it can be paid through ITC as well. While there is no restriction in the GST law which mandates that pre-deposit has to be paid through cash only, first up, there is no requirement in the GST law that pre-deposit has to be paid through cash only. Therefore, prima facie, it can be paid either through ITC or through cash. This has become contentious issue because of divergent judicial precedents. While Bihar High Court in the case of Flipkart Internet has held that pre-deposit has to be paid through cash, and which subsequently went up to Supreme Court and the Supreme Court has stayed it. On the other hand, Madras High Court had categorically held that pre-deposit can be paid through ITC as well. Ground reality is that most GST appellate authorities allow payment of pre-deposit either through cash or through ITC. Now, this brings me to the fifth and final point. What if the appellate authority rejects your appeal? Well, you have three options. First, file an appeal before the tribunal. Since the tribunal is not formed yet, be ready to pay another 10% of pre-deposit to avoid initiation of recovery proceedings or attachment of your bank account. Option number 2 is to file a rectification application either under section 161, which allows rectification of mistakes apparent on record, or file a rectification application under notification 22 of 2024 if the issue pertains to delayed claim of ITC. Option number 3 is file an application under the amnesty scheme provided in section 128 of the GST Act, which have covered in my previous video in detail. If you find this video helpful, follow me for more such videos. See you in my next video.